Wow, Siri, huh? Let's take a look at that. Sirius XM. Well, that's trying to get above its 200 day. I don't know about that one, Robert, but I'd keep your eye on it. You know, it could go. All right. Well, you know, we got, you know, they're coming back for the FANG names with a vengeance. Amazon, Apple, Google, Netflix, K-Web. I was looking at K-Web, Ira. If this thing gets above 44, it's probably a bottom in the China internet names. Michael wants to talk about Deutsche Bank. And you know, I like the lows in the NASDAQ, the S&Ps, and the spreads look good. Especially the, you know, SPU bonds holding the 200 day down here. And, you know, we're right back to that 20-year level in NASDAQ bonds at 50, which is just going to run it back and forth. So it held that. So I'll remain mildly bullish, looking at, you know, big stock rotation.
Okay. What have you been talking about Deutsche Bank?
Well, Michael, have at it. What do you want to talk about? Is it going tits up? That's what he wrote in.
I would assume no, because it's still the crown jewel of the German banking power. It's just been so badly managed, and I watched this really since, you know, for a long time, because when they tried to break into the banking, to really get strong in the investment banking sector and try to mirror Goldman especially, they paid a lot for, I think, questionable talent. And I'm going back 2.5 decades, and people I personally knew who got huge offers to go there out of other banks like Citi and Chase, and I couldn't. I was always suspect, because first of all, I knew these people, and they were kind of laughing, because a lot of them, you know, in the banking area, see, you're seeing a lot of these things float to the surface now. There were a lot of people who were very mediocre, who were able to go out and start hedge funds. Listen, these are the people I had to compete with, but I knew them from the banking area because of all the banking I did in the 80s and early 90s, and they were really mediocre, but they made huge money because they had people like Soros and Kovner as their clients. You know, there was no, what we call today is prime banking. It was just, you know, the relationships were so great because the huge hedge funds had to go places to get credit to be able to put on their positions, especially, you know, those who were not in the CTA mode. So they went to the cash market because they always believed, number one, they had anonymity, and two, the banks could take their size. It was a myth that the banks created that you could do whatever size you wanted on the IMM, but the banks keep wanting to perpetuate the myth that they couldn't handle the volume. That was nonsense. So a lot of these guys would put on positions when they would see certain actors like Soros and Kovner and you know, others, and they would just tailcoat them. When they were, you know, they were able to, you know, do a lot of prop trading, and that's what they would do. So they built names, and then places like Deutsche Bank hired these guys after they made a lot of money trading for these banks, and never really bothering to understand how they made the money. Because I used to scratch my head myself, wondering how these guys did this. But then it all, after the blow up of the EMU in September of 1992, it was so easy to see. There's a lot of, and that's when Deutsche Bank came looking to for talent to set up this business. So they've been paying their price ever since. They can't go. I just don't believe it. If they did, it would cause so much havoc to the global system, especially because Deutsche Bank is still so highly levered up. So I think what we're seeing is what's taking place, and the Germans have finally realized this. Better to ring fence a bad bank, like they did with AIG assets and RBS and Lloyd's. And other banks in the U.S., they just ring fence their bad assets and then tried to get rid of the bank. Now, with Deutsche Bank is not going to be gotten rid of. They're just trying to figure out how they're going to go about, business. Are we a fully commercial bank? Are we an investment bank? And it seems like they believe that they can't make enough money on the investment bank side anymore, the return on equity. But so if they get rid of that, my question is, where are these clients going to go to? I think I have an idea. And then will it be easier to merge Deutsche Bank? There's a big part of the merger, when they talk about merging Commerzbank and Deutsche Bank to make one German giant, part of the problem was that the unions and the government especially didn't want to take the hit for the massive unemployment that layoffs were going to take place. And we saw it, the announcement the other day, 18,000. So now that this is done, I fully expect Deutsche Bank to be merged into some, and I've always thought that if I was running this show that I would do it with UBS, because to me it's a much better fit, because the Swiss are much better private wealth managers, and if they're going to pick up that business anyway, and then they'll utilize Deutsche with its huge banking connections into German industry, of course, and that would probably be the best fit. And as long as UBS doesn't have to inherit a lot of the crap that was on Deutsche Bank's book because it gets ring fenced out, and especially you may as well dump it on the ECB, because they need assets to buy anyway to keep this program going. So it's probably an ideal situation. So I don't look for it to go bottom up. What price will this be done at? I have no idea. Nobody else knows either, because you really have to get into the depth of how bad their balance sheet is and their financial statement, and then you'll have an idea, and then you'll be able to ascertain a price. Could the price be $12 a share? Maybe. Could the price be $2 a share? Maybe. There will be some who come trying to act as vultures and pick up some of these assets and see how long they have to play this out. I have to imagine that the play has to be on the back end, because there won't be, there's no dividends to speak of or anything to carry your way through this. So this is going to be a patience game, but they're certainly setting up for something here. And I have to believe that they'll merge it and they'll create a massive European banking. And I don't think the Italian banks can take them on. They have their own problems with non-performing loans. And I'd be highly skeptical if a German would merge with a French entity, because we don't even know what the real structure of the French entities are. So I'd be looking at a UBS. And with the recent pressure on Switzerland, as we talked about yesterday, that may make sense to quell some of the raw nerves that are being exposed in that relationship. So I can't tell you when, but that would certainly make sense to me. But I'm not looking for them to go. I'm not going to use that phrase, but I'm not looking for them to be liquidated.
Oh, you're not looking for World War III in Europe, Ira?
No. Well, I'm not looking for World War III in Europe. No, it's not fathomable. But that doesn't mean that they can't be really stupid on the path to wherever they're going. And they are, but I love it. But I love it because all of this just puts out like that Wolfgang Munchau piece. I mean, it just shows. Now, I'm going to tell you what, if the Germans would capitulate to the rest of Europe and basically create and give a quick thumbs up to a true Euro bond, then my thinking changes dramatically. And if you saw that, I would want to certainly be long Europe, on a selective basis, of course, long European assets, because that would go a long way towards aiding the system. I'm not going to say resolving the problems, but it would give it a massive pump to fiscal stimulus combined with easy money. And, it's kind of easy to do that math. But that would take a total German capitulation, which, I just don't see it because the cost is immense. Now, you could say, well, they should bear the cost, as many people in Europe say, they've had all the benefits. They've had a weaker euro than they would have had a Deutschmark. They've been able to do this, and the internal trade surpluses that they run have been a huge benefit, so they should have to absorb it. Okay, we'll see. That's a nice, logical viewpoint, but you're asking a lot. And again, I stress this, and we're sitting here right after July 4th, so let's put it in genuine terms that we've seen in American history. In order for the Germans to do that, they would ask a lot of German citizenry in the fact that you would basically embarking upon taxation without representation, because again, and this is an important issue, an important point. Nobody ever asked the German electorate. Others in Europe have had referendums on this whole process. The Germans never had. They just took what was thrown at them because Helmut Kohl, when he was chancellor, he wanted his legacy to be the reunification of Germany. You can go read his stuff. I'm not making that up. That's fact. That's his legacy. So he was willing to take on all the trappings of what Europe, of what the French and others were laying onto them in order to get that done. So the unification is done. But nobody ever asked, there was never a referendum, never a poll of that nature to ask the German people, is this what they wanted? And to do it now, I'd love to see it, because it would force an honest discussion. An honest discussion would be open, and it would be worth the discussion. The same discussion that France had in the summer in September of 1992, when they put Maastricht, as it was called then, to a referendum. Now, as I remind everybody, that referendum passed barely, but at least they had an honest and open discussion. In order for the Germans to go down this road of taking on all the financial baggage, you're going to have to ask them, and that's when this would really get interesting. If you don't ask them, I think you'll have a real problem, because the cost of the consolidation of all this is going to be immense. And as Munchau certainly undertakes in his piece, which to me is that's filled with logic, as we talked, I think it was Thursday or Friday when we found out that I was on with you, when I found out that Lagarde had been forwarded as the ECB president, that they think that she has the heft to be able to consolidate the ECB balance sheet and create a euro bond. And that is the primary element here. But again, all roads go through Germany, and that's where the danger lies. But if you got that done, I would become wildly bullish Europe, because in the short term, you would see massive fiscal stimulus. The easy money policy is there, so you would really be in a true situation where would you put your money? I still ask that question anyway, because again, if you're a German citizen and you're experiencing 2% GDP and 1.5% inflation and your 10-year notes are negative 40 basis points, which is insanity by any historical measure of asset pricing, that would even make it more so. But if we ever got to that point, and I'm not looking, believe me, it's a long and arduous task. Whatever Macron and others think, that's an arduous task, and it won't be done as easy as the unification of Germany was done. I'll tell you that. So that's my very, I would say, long-studied viewpoint on that.
You know, Ira, God help them if they start with any kind of layoffs in Germany, because the economic data in Germany has been rancid. Industrial production, exports, retail sales, did I say exports? Has been absolutely awful. So I don't know, you know, how fed up just yet the German citizenry is. You know, like you said, you know, no representation, financial repression out the wazoo. If they start getting some layoffs as a result of, you know, a decelerating German economy, and the Japan's industrial production was, or factory orders were awful. No, machine tools was absolutely awful today, right?
Yeah.
And so you have two economic powerhouses that are looking like real shit. So I just wonder if layoffs begin in any kind of meaningful way in Germany, at what point do they just stand up and go, we're done?
Well, you left one, you know, South Korea's numbers have also turned down.
Yes.
You know, and they're one of the truly great measures, as Germany is, of the export of trade going around the world. So, yes, and this, you know, leads to the next discussion. So that's really an important point. And that was Matt, right? You know, I can't see you guys, so
Angelo.
Yeah, that's Angelo. And then Michael also put in here the Greek PMI is on the rise and German's on the decline, so something's wrong.
Well, you know what? The Greek PMI is being on the rise. Don't make too much. You know, it's you know, it's like people who talked about the great economic impact of Obama. You know, but there is laws of big numbers that you couldn't lose 300,000 jobs a month every month because then it would just be over. So people say, oh, you know, we stopped yeah, of course you stop the bleeding at some point, because the market, like everything else, has to take a respite and say, where are we? And that's, of course, when QE1 by the Fed proved to be a very important measure. And I always believed that was an important measure because it gave the market some sustenance and said, well, the liquidity is going to be there. So that takes a big worry off my plate. And then you got a lot of the corporate consolidations. You know, but a lot of people are arguing today that inflation can't get off the ground because the cheap money is keeping a lot of businesses alive that would otherwise not be alive. And what you do is continue with excess capacity, and excess capacity certainly breeds low prices, because everybody is interested in not how much profit they're making, but rather in sustaining market share or attaining market share. So, you know, that's why you can't get these inflation. But I think the banks holding on to these inflation targets is a gigantic mistake anyway. I always have. That's not new. I believe that these models that they work of are really terribly flawed, but they're so married to them, they can't exit them. You know, one thing you learn, and being that I was on the path to academia, one thing I definitely learned is when they build these models, whether it's a rational actor model in political science, of course, the Phillips curve, but any models that they build, they put so much energy into them that it's like a bad trader. I'm going to stay this trade. I'm going to stay this trade. I know it's right. And they get married to them. And that's a big problem of having only academics on the Fed. You get people who are married to models. It was one of the breaths of fresh air that I like about Judy Shelton, and I certainly hope that they put her on the Fed board, because, as I said on Santelli, she would open up the discourse. She's just not one of these consensus type people. She has views, and they'll get aired, and I'm not sure that they get aired now. Well, the minutes are always sanitized, by the way. So those who hang on the minutes, they're crafted after the meeting, and they're put together by the Fed chair and the secretary of the Fed. I forget what's his name right now, but they're always created to fit what the chairman really wants the meeting to respect. And I think there'd be far better discourse with somebody like Judy Shelton, who's intelligent, has ideas. A lot of things I don't agree with everything she has to say, but the discussion becomes important. So this is, a very important discussion. And are we getting the downturn? It's not enough of a downturn yet to say for sure. Now, on the other, I'm a big yield curve person. I've been that way for many, many, many years. When I've been on Santelli for many, many years, we've discussed the curves, both steepeners and flatteners, and people's eyes usually glaze over. And the people at CNBC were quick to chase us off, but now everybody wants to talk about them because they are important. Is the recent inversion of the 3-month trend telling us? I'm not sure. And nobody can be sure because of the role of the ECB and the Bank of Japan and the Swiss National Bank, and the way that the Kiwi Bank, the Reserve Bank of New Zealand and Australia, those are different. First of all, because they don't do QE. But you see that they're aggressively loosening, and I will make a bet that the Reserve Bank of New Zealand will cut rates at their next meeting, because all I do is have to look at the Aussie Kiwi cross, which is, where's it trading? 104.30. Where's it at this morning?
Hold on. $104.84.
Oh, it's 104.84. What was the high overnight?
105.32.
Okay, so if going into that meeting, I think the recent low was 104.20 or 104.30. I'm not in front of a screen, so I'm.
Well, the 1st of July, it was 104.
Okay, well, on the 4th of July, right, and we had that one spike down on that one night, but. If you're hovering around 104, I certainly will think that the New Zealanders will cut, because the strength of the Kiwi against the Aussie will be the issue. And that's when Trump spews out about manipulating currencies, if you're maneuvering your interest rates because of the strength or weakness, or not the weakness of your currency, but the strength of your currency, and you're doing your best to keep it within a range that you want it. Now, is that right based on what certain soft rules of the international financial system and trading system is? I don't know, but everybody seems to be doing it. So they're not wrong in that regard. And the only thing that I care about from that, outside of a trade that I might make in the Aussie Kiwi, is how much impact does it have on the Fed? And tomorrow we get the Bank of Canada. And I think the Canadian interest rate is 1.75. Nobody's looking for anything to happen to stay the course. The employment numbers have been good. The housing numbers out of Canada this morning were okay, but housing is an issue. Housing is an issue. They should be raising rates just to curtail speculation and froth in the housing market. But I want to see if they cut rates, because if we look at the Canadian dollar has actually been performing pretty well, because as New Zealand and Australia cut, and as people worry a little bit more about China, not that Canada doesn't do a hell of a lot of business with China, they do. But let's see. I think it's an important meeting tomorrow for the Bank of Canada.
Well, it's right on the 200-week moving average.
The 200 week, right, which we talked about last week. And but the Canadian dollar has actually performed pretty well, and that's with oil prices not necessarily being robust. They're holding in here. So that meeting becomes important. We get those results at 9 o'clock. So it's something to keep an eye on, because if they were to cut, well, it's a very stark message. Oh, it's also, I think, when Jay Powell starts speaking in his testimony to Congress tomorrow. So that gets interesting, because how can the Fed stay where they're at if everybody around them is cutting? And to keep Powell off the back. And Judd, this is a point I was going to call in yesterday, and I hope you guys kick me on this, because
no, I saw your comment on it. Yeah.
Yeah, I'm thinking about this. That is Trump not true. Let me not put this in the negative, but does Trump control what the Fed does by the continuation of threatening tariffs at every turn? Like this morning, with the tariffs, or I'm sorry, the added cost on Mexican steel, because he believes that it's being subsidized. The same with Chinese steel, but they didn't think the Canadians were subsidizing steel. And the only reason Trump raises that issue, as well as others Europeans have raised the issue of Chinese steel, is because if you subsidize it, you're keeping all that excess capacity at work. The same as low interest rates. Really, when you economically, when you study it economically, it's the same impact, that if you can keep firms operating and not cutting back capacity because the cost of borrowing is so low, you keep those pressure on prices. So can Trump actually control the Fed? And if he would learn to be quiet a little bit, he could actually send Kudlow or Bob Lighthizer to talk to Jay Powell and go, look, if you don't cut rates, you stand to have him move to increase tariffs, because he's going to get it one way or the other. So can he control the Fed by the continual threat of tariffs? Because you're going to get the slowdown that Angelo talked about at the beginning that made this discussion possible. You're going to get that slowdown. If you embark upon a greater amount of tariffs, you're going to get that. So if Powell cut rates 50 basis points, would Trump back off from even discussing tariffs? That, to me, that's the question that has to be posed to the markets, and we have to deal with it. But I think it makes a lot of sense. And if he would shut up and not continually back Powell into a corner, he might be able to get that and not have to do this, continual tweet dance. But it's just something to think about. I don't know, but I was thinking about it, and I go, hey, he's in more control of this game than I ever thought. And if Powell is aware of that, then he can say, well, look, there's so much global uncertainty that we're cutting interest rates. Kind of what he said at the last Fed meeting, after the last Fed meeting at the press conference, and embark upon that and get it done with. You're better off getting it done now and saying, look, we don't think that a global slowdown is going to happen, but there are signs that we're seeing, so we want to get out in front of it and get it done and say, hey, we're not moving for quite a while. We want to see the way this plays out. I think the market would have a lot of respect for him, and he would assuage, many things. And what's the difference? Because the Europeans and the Bank of Japan and everybody else are busy cutting anyway. They're forcing his hand. They're forcing his hand. It's again, as I say, U.S. monetary policy is really being made in Frankfurt.
Yeah. All right, so guys, digest that for a second. Just on the rotation, some of the stuff I showed you was that the NASDAQ's leading the whole show. The NASDAQ's been gaining on the S&Ps. You got no RL day there, which means the NASDAQ's leading, that's what you need in a bull phase in the indices. NASDAQ and SPOOs are blasting off against the mid cap and the Russell. It's all the FANG names. Goldman's going now. Square started off the whole fintech rally this morning. PayPal's followed suit. All the credit card companies are going. Morgan, JP Morgan, American Express, Visa, MasterCard. You're back to the usual suspects here.
Who got bought out? What small investment firm got bought out? I know it.
Piper Jaffray bought Sandler O'Neill.
Right, which is interesting because, these smaller investment firms who have, huge pools of aggregated assets have been sitting out there. They haven't been great earners because, most of these firms, operated like our dear friend Barry Lind, where when short-term interest rates were high, they made a lot more money. The zero interest rates killed these firms because they have pools of cash that sit around that they earn interest on. And when interest rates have now gone a little bit higher, their earnings have gone higher. So be on the lookout for other firms. I've been a lover of AllianceBernstein, and it's carried me through some very bad times because it's had a high dividend. It has some risk. I don't think they're very good wealth managers. But again, they have huge pools of aggregated capital, and they're moving their headquarters, or they already moved them, right, to Nashville. So they're looking at cutting expenses. They are owned by, or a big percentage owned by Allianz, the German insurance company. That's why they're AllianceBernstein. But keep an eye on them. They have almost an 8% dividend. They do have a lot of assets under their umbrella. So just, and they still have AB.
Thanks. Yeah,
this is one of those stocks. This is one of those stocks that carried me through the bad years of the great financial crisis. Because I bought it when it broke pretty hard. Because I actually know some of the people who were there, and they were good people. I actually had funds there myself for a number of years until the person who I liked left. But I keep my eye on them. They're tremendously charitable people, and I always like that. I always like doing business with people who are very charitable and look to help others. So it's an interesting name. It struggles back and forth. When I'll tell you this, when the stock market turns down, it turns down. You can do an overlay, on any, because you'll see it in December. It was weak. I think it was down to $25, $26 during the sell-off.
Yeah. There was a big break. 30.90 to 23.34. Mirrored the whole thing.
Right, and it mirrored the whole thing because everybody thinks their revenue structure's turned down. That's the way Wall Street analysts work. Who's going to get hit here? It's like they did the same thing for many times with the CME stock, but then when they finally realized that volatility begets volume, that's one you want to be hiding to protect. But now I'm not saying that about AllianceBernstein. It's a far different business model. But it's things that I'm watching here throughout this, because when I saw Sandler when they got bought out, I said, now because it's been a long time since you've seen firms like that on the purchasing block, where somebody's coming and aggregating. You saw a lot of aggregation, of course, with BlackRock during the great financial crisis, because a lot of people wanted to be under the umbrella of somebody just like JP Morgan grew dramatically because people wanted a better custodian, and that's what you saw develop, a much better custodian. So
this is a really good formation in BlackRock too. And JP Morgan for hire.
Ira, could you maybe talk about oil refining a little bit? I noticed that the refiners are starting to pick up a little bit of steam. Maybe you can comment on what kind of economic setup is generally good for the refiners?
Well, when oil prices stabilize, and summer margins are good, because of the the regs that are placed upon them. And again, that comes back, that begets the corn argument that we had yesterday, or it's not an argument, it's a discussion. They did, I'm not sure what the new mandates are. I think they're 15%. And therefore, the refineries are able to make a little bit more money. And, and again, they pay dividends. And then when you lost that refinery in Philadelphia, that huge refinery, some of that is in response to that, because that took a lot of capacity out, and you had to start shipping refined products. So that, again, boosted their margins. How much of it is due to that? I don't know. I don't know. And transportation costs, pipeline costs, and with, Donald Trump has actually been good for him because, again, he's not anti-pipeline. And when you're anti-pipeline, the shipping costs, because now you have to ship by rail and truck, which is, far more expensive. So it may be due to that. I don't know. It may be due to low capacity, which drives up margins for them. So more than that, I don't know.
Thanks.
What else we got?
I've just been looking at the spreads. That's all I've been doing all day, and the fintech stuff that's been going. And everybody's been all over Square. I mean, the 75 calls opened up at 50 cents. I think they went, where are they now? They're like almost at $3.
Really?
Yeah, that was the trade of the day. I mean, I looked at those a little late, and they were already off to the races.
Well, you know what? Well, Square sits out there as a potential acquisition. It's the same with First Data Corp. They have a lot of market power, and more importantly, they have a lot of data because they process a lot. Believe me, I'm involved in this business from the ground up. It's never made any money, but we own the patent for processing state income taxes, or not state income tax, state sales tax at the point of sale, and it being paid in rather than usually small businesses and medium-sized businesses in the retail. They pay on a quarterly basis, and a lot of them get in trouble because they owe the state government the sales tax, and a lot of them use the float. So we've been working with Square and other companies like that to put this out. So I'm biased towards it. I hope it's true. Maybe it'll aid me. We've been working on this for about 8-9 years. It's another good idea. If I would have gotten paid for every good idea I thought was out there that I invested in, I could be doing this full time.
Yeah.
But it doesn't work out. I got into grass-fed beef in 2005, just bad management. I've been involved in this energy storage business that has for 10 years. It just hasn't gotten enough traction. It still exists, but lo and behold. But but that Square is to me a potential acquisition. It has pretty good management. They've got a nice niche, and there looks to be some consolidation into this business, especially now that Facebook is embarking upon, its own type of currency. I'm still learning more about that, and I really have to see it in greater detail. But I've been doing a lot of reading about what Facebook wants to do with this. So any type of data processing and anybody in that business, it seems to be a business, and money is cheap. So if you're going to do an acquisition, the companies aren't cheap. I'm not sure what the PE is on Square, but I know it's not cheap. But in today's time, listen, Beyond Beef can rally like that. There's a lot of money chasing things. So, why not that? But I don't know anything more about that.
I mean, it wants to go to 81.53 on the monthly, and the target that was put out this morning was 80. So everybody just seemed like they wanted to take it right there to the target.
What's the all-time high? Are we at all-time highs in Square now?
No. The all-time high was over 100. It was 101.15.
Yeah.
And then it put an outside reversal lower month, last September, October, when it blew off and lost half its value.
Yeah, there's a lot of things in play, and a lot of people out there searching and wanting to use cheap money to aggregate. We've seen the M&A activity, combined with IPOs, have been robust. I think they've done a lot, of course, to hold up this market. Will they prove to be good and smart? I don't know. It's there are so many things in play.
Right now is Exxon is trying to put an ORH day in with stable crude prices. So a lot of the energy names, Phillips, Exxon, Valero. I was looking at KWeb earlier because that's the China internet stuff, and that might have bottomed this morning. I need more evidence. I need another day up. It starts closing over 44. That's the bottom in China.
Yeah, but I'm looking. Again, if I was a large portfolio fund manager, I would be searching around. Again, as we talked about the ag stocks, what stocks seem to have really, have failed to bounce. Or now you could say there's reasons that they failed to bounce. They're not good companies. But I'm not sure about that in the passive investing world in which we live in, because there are things that get stuck on the bottom. Number one, they may not be in a basket. Number two, they're just overlooked because everybody wants to go to where the momentum is, and there's no momentum on these. So it does that. It's really very much the way I found the Russian stock. To me, it was I mirrored it with other things, and with oil that it was performing fairly well, even in the face of lower oil prices. It just made sense. It was trying to tell me a story. I like when stocks are trying to tell me a story. And are the energy stocks trying to tell us the same thing? Things are slow, but we've already priced them to be very slow. So can I get enough out of this? I'm sorry for that beeping. Can I get enough out of this to step in here, because they're unloved, nobody wants them, and yet they pay a decent dividend. And at some point it behooves you to start looking at these, because if you think a massive global slowdown is coming, well, why do I want to be in growth stocks that have PEs of 40, 50, 60, 70, 80 times? Why do I want to be in these? If you think that we're just going to muddle through here and we'll find our way through, well, then it does make sense to start looking at some of these unloved and underowned equities. So is that what you're seeing? I think you see it on some day-to-day basis when you get stock pickers who come looking for values, but they're just not a strong enough group at this point. Hello?
Yeah,
Hello.
we're here.
Oh, I'm sorry. Something cut in there. I don't know what the hell that was.
Somebody was playing something.
So, again, it makes perfect sense to me, and these are things that I'd like to do. And I've been, looking for myself. Again, that's why I talk about the ag, and I talk about, some of the emerging markets. I read Morgan Stanley's piece twice, and the emerging markets that they pan, the currencies tell me a different story. Look at the peso's up today, even in the face of Trump, doing the anti-subsidies tax on Mexican steel. I was hoping for a big sell-off there. I didn't get it because I'm out. I don't have any pesos right now because I keep looking to buy them on breaks and sell them on rallies, and that's what my game plan is. All of a sudden, with that. So I was hoping for a significant break.
Ira, your friend Peter Bookvar was just on with Santelli.
Oh, was he? I'm doing a hit with him this afternoon. What do you have to say? I didn't see it.
Well, basically, he doesn't think the level of real interest rates is an inhibitor to economic growth. So he doesn't think Powell should be, a captive to the markets, right? And just reinforce the fact on Capitol Hill that, look, we're going to be data dependent and we're going to see how things go. And while he was saying that, I'm watching the dollar, and I've been, watching bonds the last couple of days, and I'm starting to get the feeling that the dollar and bonds are beginning to think that Powell is not going to cut rates this month.
You know what? It's interesting, and I know Peter's been, because he doesn't want to rate. He thinks the Fed is being held captive by the markets, as I do. Him and I have agreed on this a long time. And good. I'm glad you told me that, because I didn't watch it. I'll have to go watch the video. But Alarian is out with a column today in the FT, and others saying that he better cut because the markets have already done it for him. And if you view that curve as a high quality predictor, then it's telling you something, and get out ahead of it. But I think Powell has kind of painted himself in that corner, right? Is that what we'd agree? That he has really painted himself into that corner, that he's been held prisoner to the markets. Because
I would say yes. I would say yes.
Yeah. I mean, he pivoted dramatically. In January because of what the markets did. So he
I don't
continues
think
to
he
be
had
held.
a choice, though. I mean, I don't think he had a choice when he was told that high yield credit was frozen for 40 days.
Well, that's my point. So he gets held. And if you look at the TLT, HYG, or
We were
if you
talking
look
about
at the high,
Ira, the HYG, one of the guys, because there was huge put buying in the HYG.
Yeah, what's that spread out to? I know it's been widening, to be long treasuries and short
well, the
high yield.
HYG is 86.74, and where's the TLT? And the TLT is 132.44.
Yeah, and so that's what $46.
Yeah.
So how high? What's the range been for the last year?
Hold on a second. Let me put up the spread.
Ira, if the Fed does not lower rates this month, you think there'll be a shit show in the euro dollar futures market?
Oh yeah.
Yeah. Because the euro dollar futures are almost 2 standard deviations overbought.
Yeah, and I'm watching it this morning because I'm still playing with it. I'm long. I put it on the other day when it was -1. I bought the 20s, the D's 20s, and sold the D's 21s. I don't know. It was at +1 this morning, but I keep playing with it because. And I'm not sure. So if they don't cut, I know the D's 20s will get hit hard, but so will the D's 21s.
Well,
probably not as hard because people will think, well, they're going to the recession, so they'll unwind that. I won't sit through the Fed with that. I may get hurt with it tomorrow morning or Thursday morning, because if they don't see that, then the issue is, the issue gets. Well, he's going to stay the course long. That's going to ensure a recession. But that's based on a presidential, election view that I know they won't raise rates, but we already have an implied cut. I think the D's 20s are where 98.31 this morning. Where are they trading at?
Hold on. I got them on a different page. The spread, I put TLT over HYG on the weekly spread.
Yeah.
The high of the year was, well, we're over the high of the year right now.
Oh, see that? Right. And that's telling you that somebody's putting on. Somebody thinks that there's some problems in the corporate debt market, in the high yield.
Ira, you read Chris Whalen, right?
I do. I'm a big fan.
Well, what's he been saying like the last couple of days?
I haven't. You know what? I only read them when it comes through on Seeking Alpha, or I don't get. He used to send me his stuff directly because but now he's always bouncing around as to who's he with and what he's doing. But I think he's truly one of the better analysts, maybe the best bank analysts out there. These other guys are just, to me, they've been wrong for so long that he hasn't. But that's.
He has a blog. He's got a blog.
Yeah, I don't. I should go to it more because he is good. Chris Whalen is very good. Yeah, and he understands banking, plain and simple. Yes, he not only understands it.
Excuse me, you guys looking at the D's 21s, or you're looking at the D's 20s and the euros?
I'm looking for both. Where's the spread at right now?
Well, the D's 21s are trading at 98.29, and the 20s are 98.30.
Yeah, it's at +1. So the other day they went out to +7 or 8 after the Fed meeting when all the curves steepened. You can see it, and then that spread came back. So I thought it was I don't have it on in any significant way. It keeps me very attentive to what the curves, because it really is gained sensitivity, especially to the 2-year. So it's just something that I watch very closely, and we're in the throes of it. But I'm interested, in ferreting out more of my concept about that Trump can actually control the Fed here through tariffs, or the threat of tariffs, or the removal of tariffs. He's all of a sudden realized.
Ira, would you always have put on a pair trade, the 20s and the 21s, or is it just in this screwed up environment with such intervention, and bad market signals?
Well, first of all, before you answer that, before the low of the day is the 200-day, and that spread on a daily.
Yeah. Okay. I didn't even know that, because I just looked at it.
Go ahead.
Yeah, I know. I just look at it in now because, with the presidential election and the rates. And so it intrigues me, because a lot of people were pushing on it and using it. That's where a lot of these option guys, there's been some big losses, from what I understand, sustained in the euro-dollar option pit by locals who had enormous positions, crushing volatility positions, which my stance on that. It pays, but they've gotten, I heard some really huge losses have been taken in the last, since this volatility ramped up following the Fed meeting. And don't think that the Fed isn't aware of the importance of short vol for financial management right now. I think that's what panicked them into the pivot, to tell you the truth, that they were hearing about significant losses in the in some banks and hedge funds with who got caught in bad short vol in December, because that's when Mnuchin, of course, spends Christmas Eve weekend, or through Christmas Eve, and a couple of days calling around the banks, which nobody understood. What is he doing? What are we should be concerned about? And I think that they were hearing that there were some massive losses, or could be sustained if volatility. And so every time the Fed cuts, we get a reduction in volatility, right? Because the market says the Fed has my back. The Fed has which is why the Fed and others try to contain markets and don't let them really react. So we'll figure out this more as you see I'm available this week. I'm going to get going. I might call, if you guys are still around, Judd, give me a call around, or text me at around 12 or 12:30. Maybe I'll come back to you. I got to go do a little more reading. I got to see where we're going here.
Okay, so guys, just in general, what's going on the board right now? This whole capital flow's over. Bank of the Ozarks tried to put in an ORH day. The regional banks are all strong, and I think you got to let the whole board reset now.
All right, I will talk.
Okay, thanks, Ira. We'll talk to you later on.
Okay. Okay, bye.
Stop recording.